crazy? Like what? Seems so silly. I wish you could short Hex. God, I wish you could short Hex. So many haters would be liquidated and have to buy higher than they thought possible. Oh my God, that would be so beautiful. Please, once Pulse is out, please someone put Hex on a margin trading platform where they can short it, preferably on chain. Oh God, I can't wait. Cannot wait. Like if Hex gets added to one of these lending platforms that would be on Pulse, right? Like I don't want to name them, but there's places where you can borrow coins. If someone would be allowed to borrow Hex price goes up. They have to buy it back at a loss after they sell it. God, oof. That would be so cool. So cool. I've wanted that for a long time now.
What is up, guys? It's your boy GRC. We're coming at you live every single day at 11 a.m. Eastern, crypto in the morning. We got stuff to talk about. Famous.io, decentralized leverage trading. The testnet is out. I know what you guys are all about, you little degens. I know it. But anyway, we have two CFAs in the building. So we're going to assume that they're going to be talking back and forth, slapping each other's ass, acting like they're smart. No, I'm just kidding. They are smart, but it's funny because they know a lot of. Anyway, people love to hear the back and forth, but then we're talking about actual products, financial products on top of it. So that's kind of where we all merge to the middle. Sam's looked at the details. He's been staring at this stuff like he's got a test tomorrow. And we have Buck and Dylan from the teams. From famous.io, which the testnet is now live. So we're talking about a live testnet, guys. Crypto in the morning. Sam's in the green room, guys. What's going on? I want biceps in the chat. Crypto in the morning live every single day at 11 a.m. Eastern. DeFi Proof is my man's.
You already know what time it is. Crypto in the morning. Crypto in the morning. Crypto in the morning. Waiting on phone. Crypto in the morning. 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 Waiting on phone. Crypto in the morning. Crypto in the morning. Smoking a blunt on my way to the gym. 11 a.m. and I'm already tuned in. Got me some hex and I'm making a stake. Got me some hedge on, I'm making it rain. Pay me some maxi and that's just in case. Jim Reddit sent me to show you the way. Crypto in the morning. 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 Crypto in the morning.
Yo, what's good? I'm looking forward to this conversation. I've talked to you about leverage multiple times. I'm not necessarily a giant fan of leverage in crypto because then you get like volatility squared, which is just a massive amount of volatility. But I would love to benefit from other people using leverage in crypto. And famous.io is actually coming out with a protocol where you could actually get paid from other people's degeneracy. So that seems like something that would be fun for me to talk about, understanding that. So I'm looking forward to this conversation. How you doing, bro?
I'm doing good. We got a lot to think about here. The landscape of crypto is what everyone's trying to figure out. Where are these little users going to spend their money? Everyone's trying to figure out. And the truth is, no one really knows yet. You can assume that there's going to be some volume, but no one knows what the future of innovation looks like. To hurry up and get these financial guys in here. All we're doing is replacing financial products with less negative externalities. Get it over with. Get it over with.
This is a slow train that is going to continue to just eat up anything in legacy, right? Everything that is in legacy related to finance is going to be slowly eaten up by code in the blockchain to go away, so you don't have to trust third parties. and moving into DeFi, moving into blockchain over the next coming years. And we
decades
in front row. We get to watch all this play out.
Don't say years. It's the years. Like, people aren't even figuring out Uniswap after 7 years. Let's say decades.
It might take a while.
For everything, for the full transformers.
Mhm.
There's going to be pieces in between. But let's bring the guys on. We got special guests. We're talking about serious crap today. Serious crap that I sacrifice for. So let's get.
There we go. Hey, fellas, how you doing? We've got Buck and Dylan in the house. How are you guys doing today?
Doing well, gentlemen. How's it going?
It's going glorious. I mean, what can we say? You know, everything's going to zero. We're good.
Oh, hello, everybody. Buck Phiat here. Thanks for having us on this show. I was really impressed with that intro. I already disagree with a few things you said, but that's good. I'm looking forward.
Well, we don't like people who disagree, so let's just drop Buck down right now.
I'm going to block you now, sir.
Okay.
Yeah. So before you get into disagreeing, do you want to tell people a little bit about how you got into crypto and stuff and your history on this?
Yeah, sure. So I'm a traditional finance guy, just like you were mentioning, and I do agree with your basic premise that if you take a high level look, crypto is looking to do what the internet already achieved with the rest of commerce in a sense over the last 30 years. 30 years ago we had local banks and local hardware stores, and then we had big box stores, and you started to get these things like Amazon that would come along and kind of disrupt general brick and mortar stuff, and you had email disrupt the postal service, but the finance pros, which I'm one of them, we've actually been protected pretty well through all this sort of electric trend that's happened through the internet over the last 30-40 years. But crypto, I think, ultimately does have a role to play potentially in making guys like myself sort of redundant. It can be an important check. It can be an important check on governments as well, both from a fiscal and monetary side. So what I mean by fiscal, I mean how much of your tax money they spend, and then from a monetary side, I mean what their central banks are doing, right? So that's sort of my basic preamble on crypto. For me, I was a young guy working in the investment world when Lehman Brothers happened in 2008, and it happened sort of at relatively early on in my career, and really messed things up for everybody, right? It was in January, I think, 2009. So just before the market actually bottomed, when Satoshi came up with Bitcoin and whatnot. So I was instantly interested in this concept, but I watched it, basically from afar because it just required too much technical knowledge for me personally to really take advantage of it. But I always liked the basic sort of libertarian ideals of cryptocurrency. That they really spoke to me as somebody who was a little bit jaded by what happened with Lehman and the government coming in and ultimately bailing out everybody, which they probably had to do in a sense. But the point was it should have never gotten there in the first place. And it's funny because I think that sentiment echoes to the current zeitgeist that we have in markets today, where we predictably had a large bubble created by central banks yet again, throwing money at the world. You had globally coordinated fiscal policy, free money for COVID, and created a massive asset bubble, not just in crypto, but across everything. So, equity, property, bonds, and your crypto, of course, which is why we all got rich for a little bit last year. And now you're starting to see that unwind now as interest rates go up. So inherently, from a perspective of somebody that wants to see a better world, I do see crypto having an ability to really improve just the mechanisms. And what we're currently experiencing in crypto is a contagion event very similar to what we experienced in 2007, 2008. A lot of people think Lehman Brothers was just a one-off thing, but it actually was a sequence of events for those of you guys that weren't around for it. It really started in August 2007. BNP Paribas had a problem, and you had Bear Stearns basically needing to be acquired for $2 by JP Morgan in March 2008. And then you had the main event, which was Lehman in September 2008. So you had about a 13-month lag before things really kicked off.
Isn't it interesting that this is kind of like parallel for people who weren't paying attention to it? People who are paying attention now, we have bankruptcy after bankruptcy after bankruptcy in crypto. And then companies that say they're liquid are buying these other companies back and forth to whether to try to bolster things in the future or just cover things up as an SPF. And the same type of thing was playing out back then, but it wasn't in crypto. It was in the legacy world. Same exact type of thing.
It's just insolvency that's covered
over leveraged.
Yep. It's just covered up and leveraged out and just spread out so thin until the whole thing collapses. It seems like I was a boy when that shit happened. I was young. I was a kid. But that's exactly what's going on right now. Everyone's insolvent. Crypto is basically centralized exchange trading tokens that all went insolvent, except for a couple of nerds. Literally.
Yep. So I think that's kind of what's important to kind of learn here is when we had 2008, it was certain types of derivatives, especially. I mean, there was a bubble in general, but there were certain types of derivatives that basically went bad, and there were lots of counterparties that then subsequently went bad, and that caused this sort of domino effect. You're seeing something similar happen right now, and you can argue that maybe SBF was and what he was doing behind the scenes with Alameda was one of the central villains in this. But the truth is, there's many villains. But when Terra Luna went bust, I don't remember exactly how long ago it was now. That set this sort of train wreck in motion. And to me, that was a very easy sign that if you could, you would want to hedge. But the question is, where are you going to hedge? Where are you going to trust? Are you going to trust the exchanges to be solvent? Are you going to trust DeFi, right? We didn't really know, right? We needed to see how this played out. I think you could have made an argument for both at that stage. And
how do you think about hedging, Buck? How do you think about hedging on a more of a portfolio level, right? Because you see this happening in crypto, but you also put that into perspective on what's happening with helicopter money from central banks. And there was a period of time where the U.S. was changing policy relative to everybody else, which you could see that the dollar was strengthening, right? So do you think about the hedging as in something using a derivative, or do you think okay, I can hedge in the crypto space by getting into USD because the appreciation of USD? How are you thinking about that?
Yeah, sure. So you have a lot of options, right? You don't need to necessarily hedge it specifically. And this is just speaking more generally about crypto, right? You can buy basically put options on the ARK ETF as an example, and that'll probably have similar sort of beta, right? You can you can use sort of derivative exchanges in CeFi land as well as DeFi land. So you have quite a few different types of options to sort of go risk off. The dollar strengthening is really just another way of saying risk is off in the market. So when I saw that Terra Luna thing, I immediately went and bought options and put on shorts on things like GMX and DYDX and things like that. But the problem is, as a Hexagon, is that we don't have those tools yet, and that's one of the things that I've been trying to address. So we'll go into this a little bit, but just finishing up on this sort of DeFi versus CeFi thing. Over the last 6 months or so, as this has been playing out, we've watched one CeFi shadow bank after another collapse. So you had Celsius, BlockFi, Voyager, and you've also had a major exchange in FTX collapse, and those are the CeFi guys. Whereas, Uniswap and Aave and GMX and all these guys are doing absolutely fine, right? They're experiencing stress, which is what's going to happen in this sort of environment, but they're ultimately surviving because those contracts are things that we can all read and we can all see, and they don't have the ability to go fudge with numbers or do weird off-balance sheet transactions with each other, and we can see everybody's position at any given point in time, and that is a miracle. That's a financial breakthrough, and it's something that we should appreciate about this space, because it's actually way ahead of the rest of the world. In order to prevent things like 2008 happening in the traditional finance world, we have to do so much compliance, so much regulation, and it's a huge burden. This is so much simpler. It's just on contract. So I actually feel fantastic about the future of DeFi. And I do think it's still in its infancy. I think Jim Rad said, a lot of people still can't understand Uniswap. I think he's absolutely right about this. And I think the internet was the perfect analog for this, because the internet used to be super hard to use in the 90s. It was slow, required, you to enter, weird codes and things like that. Whereas now my mother, uses an iPad, and, she's in her late 70s, and very untechnical, right? Because the internet's actually got that.
It's more about tech. It's more about what's projected as far as marketing nowadays, rather than it actually being difficult. In a sense, it's more like what are they looking at and who's telling them. Like if Oprah is telling you how to use Uniswap, I'm sure my mom wouldn't have trouble with it. But no one's going to tell you that ever.
I would definitely listen to Oprah talk about Uniswap for sure.
I could
but the standpoint is that it's like distilled at that point. Like
it's just you, Buck. It's just me. It's just Sam. It's just guys that sit here and know that we're probably going to be successful because we have understanding of these fundamental systems when no one else does.
Yeah, there definitely needs to be a paradigm shift. In the crypto subset of the financial literacy that everybody has, right? On the outside of that, it's even worse. Right. So we still just need to do the whole paradigm shift inside of crypto before we can even reach those people on the outside of crypto. You know what I mean? That still has to happen.
That's right. Because most people in crypto are effing clueless about stuff.
They're still illiterate about this stuff anyways.
But the leaders in crypto want no one to understand this shit because it just makes their bags get messed up. Because they're just running it all. They run it all. It's all about money at the end of the day. But someone needs to step up. And Richard had his day where he taught everyone about everything. For real. Like Richard legit taught everyone everything for 4 years. It's not on Richard to teach everyone, but you can't just be stupid about it. We need mature adults to move in and get a piece of notepad out, get a computer out, and focus for 10 fucking seconds. And make some shit happen. That's why I like you guys. I like BNBP, Jacob. There's a couple hexagons that build certain random stuff, but I really admire them because they really just put pen to paper and make something that's cool where the users can benefit.
I saw this trend happening where people are doing, we'll get into the details of the famous IO, where the protocols are going to be utilizing the strategy of giving that benefit to the users, but less so in terms of, if you put yourself in the hands of like a basic user of something or owner of something, I couldn't care less if something's burned, doesn't matter to me. But if I can receive an airdrop of free money, that is, even if it's trivial, that is far more impactful and gets more people to talk about things. And then we see BNBP coming out, right? And then you guys are coming out with this where the user can actually benefit by getting fees from the system. And I think that we're going to continue this trend throughout 2023 as more people take on this, right? You can replace things like different, like say it was bonds or dividends or real estate, right? Or REITs, or allowing yourself to get some type of income every month or quarter or whatever it is. I think that this is a untapped area or very little tapped in the crypto space, and it will continue to expand. Now with Fiat, right, and with famous.io, these are, liquidity has to be a piece of this. And this, I wanted to talk about liquidity for a moment before we get into the details of the project. I think that liquidity in general, having access to the market, is something that not many people are talking about. If you look at history in any civilization, there's always been a gatekeeper to liquidity, to access the market. Like the simple thing is like voting, right? Here in the US, right? You can't access that market, right? Accredited investors here in the US, right? That basically is a tax on people who don't have money. Black people doing things. There's always some limiting to the market. And in liquidity in DeFi, you don't have that. And I think that this is something that most people are not paying attention to, but that's a massive, massive innovation. That, Buck, I would like to hear your thoughts on the shift, or do you see that same type of shift with the income focused from the coins, as well as related to liquidity, and how much of a breakthrough that is? I don't think most people in crypto actually understand that.
Yeah, so I think historically most crypto has been sort of a what you call in finance a greater fool's game, where you basically need to buy a token and then go find a bunch of people to buy it from you and sell it to them at a higher rate than you did in the past. And that's okay. It's not necessarily a criticism, but you know that's what they most of them are. So Bitcoin is that, Litecoin is that. I would argue Hex is also that. This might be controversial. Obviously, you do get inflation rewards in Hex for staking, but you know that is an inflation reward. So that has a different dynamic that it creates. It's not like buying an equity where there's actual earnings. There's actual fundamental value coming into the company, right? It's fundamentally going to be a different sort of thing. And I think what you're going to see going forward is that people are always going to like meme coin games, and they're always going to like these sort of greater fool type games as well. But they're also going to prefer things that are going to have actual fundamental value attached to them. And you know, I think we're going to see a lot of innovation still. I really do believe this is still the early 90s in crypto, like in terms of the internet, and it is still way too hard and inaccessible. In terms of liquidity, you know, once again, the big boys, you know, the pension funds of the world, you know, they need these markets to be a certain size before they can even touch them. We work with these guys every day. You know, their investments are, you know, going to be, you know, they're going to start around 100 million, right? You literally can't invest in, you know, most of crypto with that kind of money, right? There's only a few things you can even touch.
Hardly Ethereum.
Hardly, yeah.
Hardly.
Yeah, exactly. So somebody like Michael Saylor, who's a celebrity in this world of crypto, right? You know, he's only put about $1 billion to work, or I forget exactly how much, right? But that's not even that much money.
Yeah,
yeah. I mean, there's you know, asset managers with, you know, north of $1 trillion, right? There's pension funds like the Norwegians or Thomasek or, you know, the Japanese.
Do you think they'll ever buy Hex ever?
Maybe.
Yeah, that I would say is a low probability, most likely, but that doesn't mean we should give up, right? You know, we have to obviously.
This is the level-headed man you've ever met in your life. That was just about. If I would have said it myself, I would have been like, I would love to fight for that. I'd like to fight for that, but I don't necessarily like. If I was gun to my head, I'd be like, hold on, let me think about a few things, because there's big players here.
So the investment world kind of teaches you that the things that are obvious are usually expensive, right? You know, like you can go buy Apple. Apple's a great company, but everybody already knows it's a great company, right? Apple was the first stock I ever bought. I bought it in 1998. I think it was about $6 a share. It's split several times since then. I bought it because I saw, you know, the original iMac around that time, and I thought, well, this thing is pretty cool. It's easy to use. It's one piece. It simplifies things. It's got a nice color. You know, you could get it in this sort of cool blue and things like that. And I watched this ecosystem just develop, right? And it didn't have the best hardware at the time, although it claimed it did, right? It didn't have the best, you know, performance, although it claimed it did. You know, it was shiny. It was garish. It was dumber than PCs in a sense, but it created a cult community around itself, and that community just kept going, and everybody laughed at it. And now it's basically the world's biggest player in the market, and it didn't invent MP3 players. There were other MP3 players before the iPod, but they created the simple one that the average American could figure out how to use. They had one dumb flywheel on it, right? So I see elements of that in the
beautiful analogy.
I see elements of that in the Hex community, right? It's like I was arguing with Eric Wall yesterday in the Twitter Spaces, and Eric's like one of these tech nerds, which I'm not, and so he thinks the best technology should win, but the investment world teaches you that's not the case. The best technology usually loses. There's no shortage of really complicated German and Japanese products out there that average Americans can never figure out, right? So it's the thing that's going to resonate with the most people, and there's a much bigger market for that sort of stuff than people realize. Like, there's a lot more Americans that want to go to Applebee's than go to a French restaurant and eat escargot and foie gras, right? So I think there's a tremendous upside potential because we are sort of looked over, gate-kept, et cetera. But I think we do have some things that are quite interesting, such as we all know how to use DeFi to some degree. We all know how to use MetaMask. We all at least know how to use staking, right? And that means we're basically off of CEXs, right? So that makes us quite unique relative to the rest of crypto. And Richard has managed to bring on, some pretty average Americans. I talk in the Twitter Spaces quite a bit, and some of these people are, really salt of the earth average Americans, which is something new in crypto. Because in the beginning, it was all guys like Eric Wall, tech nerds, and things like that. So we outnumber the Eric Walls.
Tell him to unblock me if you talk to him, because I actually like some of his stuff, and he blocked me because I'm a Richard Hart maxi, and I was never a Richard Hart maxi, and now Richard blocked me. So I want that to be unblocked.
The irony. It just
don't be so sensitive, man. It's okay.
Yeah.
Stick by your guns. At some point, I like his stuff.
Where do you see? So we're at such an early stage. If you look at the Crypto.com's annual State of the Nation, there are 3.5% of the globe is in crypto, but that's 300 million people roughly. Of that 300 million people, there's probably 10% of those or less that actually understands, maybe Uniswap or staking or some things, or how to understand what a good, decent protocol is and how it might be structured. And when the tide comes in, right, which is happening, we're at that point of the technology S curve where you're at 3.5%. So at the end of this year, will probably be in the 5 to 7% of the global population in crypto. And that's going to continue to accelerate its growth forward, which is going to lift all boats, whether they're shitty as fuck or something, like Hex that a lot of people really, really like and has a really strong community and a lot of people in there who at least have a better understanding of crypto and the fundamental pieces of crypto than most of the crypto space. And that's going to, as that moves forwards, that's just going to lift everything up because you have new users come in, right? Like you were talking about, and it's the same exact thing happening with all of crypto. It doesn't matter what it is, right? New shit, new money comes in. Great. That new money is going to lift up my shit, right? That's why all pension funds, hedge funds, etc., that cannot legally invest into crypto right now. When they come in, they're just going to be buying shit from us at a higher price. You know what I mean? So it's fascinating to be in so early, like you mentioned, around 1999, whatever was happening back then. Dylan, do you want to give us a little bit of a preview of famous.io and kind of get us rocking in that direction?
Sure, yeah. Let me fire it up.
Well, tell us about it real quick as you're pulling it up or before you pull it up.
Buck, if you wanted to, while I get this ready.
Yeah, so basically with famous.io, it's our second product from the Phiat team. Famous.io is a fork of GMX and a leverage trading exchange built for purpose for Pulse Chain. We have built it with this community in mind as a way for people to hedge their exposures. But obviously, leverage trading is controversial in the hex community, because a lot of people do use it and get wrecked. And that to me doesn't necessarily count as degeneracy. It's just that when you're using derivatives and you're usually using them to hedge if you're using them correctly, meaning that in a way you're expecting to lose. And this is no different than what you do with life insurance. You buy life insurance hoping
fancy words. So what can you tell people what hedging means? Because most people who just heard you talking about hedging are just like, oh, I have no idea what the fuck he's talking about.
So yeah, good. So what does hedging mean? Hedging means you're net exposed to hex. Imagine it's a year ago and it's going up from 10 cents to 20 cents to 30 cents, and then it gets to 50 cents, and then you see Joker and other guys in a church dancing on a coffin of Eric Wall and other hex furus, right? And you go, fuck me, this is actually getting overheated. This is looking like a bubble. What do I do if this thing goes to 2.6 cents? Right? What can I do? Can I emergency end stake and sell everything? Yeah, potentially. But that has costs and things like that. But hedging is when you have the ability to basically go to an exchange like famous.io and go, hey, just in case I'm wrong about this, I can put down a very small amount of money and get quite a bit of leverage exposure to a short, let's say. And if hex does plummet from 50 cents to 2.6 cents over the next year, I'll be able to have to dampen the impact from that car crash, right? So that's what hedging is. So if you had these tools available to you, then you could have removed a lot of the pain that a lot of you have felt over the past year. So that's what hedging is, and it's a very moral, it's a very correct thing to do. It's called risk management in the industry, and there's absolutely nothing wrong with it. So that's the proper usage of derivatives. And people that work in the investment world use derivatives all day, every day, and we absolutely love them. It sort of sounds like a dirty word because these things do require a lot of knowledge and understanding of markets and things like that. But there's absolutely fundamentally nothing wrong with them. Now, the other thing I'll say is that with these exchanges, some of them are really immoral in the way they target retail people on YouTube, and they target people that don't know what they're doing. And in that regard, I would say those things are quite bad, right? And a lot of times these things are also unfair as well, especially the CFI ones, because basically they take a clip and they have rigged the odds in their favor, and you don't get to take their side of the bet. So with famous.io, you have the ability to be long, you have the ability to be short, you have the ability to bet against the longs and the shorts, and you have the ability to basically be the exchange owner through the fame token and just collect fees. So the choice is yours. You get to take any of those bets, and that makes it inherently a much more fair thing. And it's very important that we have these tools in DeFi, because what will come to Pulse Chain ultimately is sort of CeFi oligarchs like CZ, like Sam from FTX. And we will all be enamored with them because they're going to have a lot of money, and they're going to drive Lamborghinis. But we can't necessarily trust those guys. And we want to encourage people to use DeFi tools as much as possible as a check on these guys, because they will ultimately fuck up, just as they have in this cycle. And in a large way, we just don't want them to have too much power over our future in this community. It's our biggest selling point in my mind. So
can you give just a very simple example, so somebody's like understands that like there's hedging is risk and like how to mitigate the risk. So somebody has 100,000 hex and it is it's 56 cents. So what would be a play? What would be somebody's like, hey, I think this is the peak. I think this is going to go down from here. So people can grasp what this is, right? Because they need to see an example. Otherwise, it's still like very heavy. So I've got Hex, I've got 1 million Hex or whatever, and I think the price is going to go down at 50 cents. How would somebody mitigate that risk of the downside?
Yeah, you're good at this. This is a great question. So Dylan, could you pop up the trading screen, for example?
Sure. Yeah.
So,
There you go. So
go to trade.
Yep.
You go short. You're gonna pay with USDC to make your short, and you say, okay, you wanted 100,000. How much Hex did you want to hedge out? 100,000 Hex. Well, there, Dylan's done. It looks like 14,000. Yeah, add another 0. Okay, so now you're 2x short, right? So that you can hedge out your position. But you could also, let's say you didn't want to risk 100,000. Let's say you only want to risk, let's say 20,000, Dylan. So change it from 20,000. Yeah, you can use the leverage slider now to move it over, right?
Let's do 5x.
Yeah. Oh, whatever gets you to 100,000. Just move it to 100,000 there, right? No, that's 73,000. Go further.
Oh yeah. Okay. So just for reference, Hex on testnet is about $1.37. So.
Okay, there you go. That's good enough. So there you go, guys. So if Dylan hits the short button there, which maybe he will in a second, or he did. Oh, yeah, just hold on. Basically, what he's doing is he's covering his Hex position. So if Hex price drops, he doesn't care, right? Because one of his bets might be his actual spot long. So the Hex he holds, right? He's going to make money on the way down on this short that he's just put on, which basically just neutralizes his risk. So if it's August 2021 and you think the top is in, but you're not 100% sure, you can take $20,000 there and hedge your risk of 100,000 Hex. So like that's what one way to think of this as a useful sort of tool to have, and you don't mind being wrong, right? If Hex then goes up another 10x, you're not really going to fucking care that you lost 20 grand, right? You're just going to be really happy with yourself, right? But if you do have the car crash,
I like the analogy of hedging kind of like as insurance, in the sense that there's, you can definitely be wrong, but you still have, here you have to have auto insurance by law, right? But you don't necessarily need that insurance, but it does give you the protection if something happens. So if somebody has the idea that something's going to go up or down, you can think of hedging as like buying insurance, right? So if that's still complex to you, you should do a lot more education.
I can give an example. Like, what do we all know about Zen? Like, the supply is not minted, so anyone with a brain would know that the price is going to go down, right? But if you have really heavy mints, let's say 400, let's say you have 100 400-day mints, but you short the price short term, you get the best of both worlds. You get the best of if the situation is that Zen goes nuclear, you have more Zen than you could probably keep your hands on. But if the sense is that Zen just keeps going down in price, you're making money in the interim on kind of both sides of that bet, and pretty much just making money in between as well.
So now if you were thinking about, say, hey, I think we're very close to the bottom of the bear market, and I think that things are going to be going up from here, but I only have a certain amount of capital available, but I would like to amplify that. It would enjoy greater returns than a $10,000 investment. How could somebody leverage to increase their exposure from, say, $10,000 to get, if there's a doubling, say from 2.6 cents Hex to say 5.5 cents, you're like, I think over the next 90 days, or say 6 months, I think over the next 6 months, we're going to have a price from 2.6 to 6 cents or higher in Hex. And they want to do something to take advantage of that belief. How would they go about doing that?
Yeah, so it'll be the reverse. And there's a lot of different ways to use this, by the way. And yeah, this is a good example of one. But you may also want to keep in mind that in investments, you're going to be wrong a lot. The statistics show that anybody who invests, who's even really good, the best guys in the world, are wrong about 40% of the time, right? So you should never ever go all in the investment world. It's just not necessary. It's not like a game of poker. You can basically use these things to basically get this exposure, risking a finite amount of money, and if you do get it wrong, you're okay with that, right? So yeah, let's say you are trying to time the bottom. You're not sure when the bottom's coming, right? This right now is a great example of it. We could be approaching the bottom. The Fed is probably going to start slowing down. The forward-looking economic data looks terrible. So yeah, most of the investment world is trying to pick a bottom, probably in the next 6 months to a year, right? Some have already called it, right? So now's a perfect example of when you might do that. But what if this contagion continues? What if Pulse Chain never comes? What if the SEC FUD is real, right? Well, one thing you can do is you can risk a finite, smaller sum of money and get the exposure that you would like to have, longer term, right? And if you get wiped out, the first time, that's okay. You add the exposure later at a lower level. So you would basically go in, you would switch to Hex, let's say, Dylan, and go long using Hex.
And this can also counteract your staking strategy. Let's say your staking strategy is 3 years. Well, you're going to have a certain amount of Hex in 3 years. So you can, like you said, take a little limited portion and double down on your initial value if you think it could be downward or upward or whatever.
Because I had mentioned $10,000. Like basically Buck's saying, don't fucking put $10,000 into this if that's all you have. Like maybe you take $100 or something. Like
start slow. Start slow. Learn.
Yeah. Well, if you want $100,000 of exposure longer term, what I'm saying is then you can basically you can use $10,000 now to get that exposure now. And if you're wrong, you still have $90,000 to basically start adding your exposure as it goes down. And that's one potential strategy that you can use. I like what you just said about keep in mind your total portfolio. I always think about the total portfolio. So like my house, my equities, my bonds, my crypto. I think about all of it together, right? And I sometimes I find myself in a position where one of these assets has done too well, and it's become too large, right? Hex about a year ago was such an asset for me, right? It became a tremendous amount of my net worth. So that basically means I have to sell it if I'm being rational, right? And following portfolio management theory, right? Which is pretty much kind of what you saw. Right, a lot of guys, we call it cashing out and buying Lamborghinis, but what they were doing, there's nothing wrong with it, but it's just predictable investment behavior. If something becomes too big for you, you need to diversify out of it, right? And this is one way that you can do that without necessarily. If
you were over leveraged 5 staker and you had way too money in that region, how would you counteract that situation in this portfolio? Because I know many staker syndrome is as real as it gets.
Yeah, so I mean, for those guys, like they're locked in for a very long time. But you could take Hedron, for example, and short it, right? Because they would be the big Hedron guys, I imagine, right? I'm not a super long term staker personally. Like I think you keep about a year on average. But yeah, they could basically just short their Hedron, right? Because they're naturally geared to Hedron. They could also put shorts on Hex and things like that. So like to me, there's absolutely nothing wrong with these things. It's just that Richard's going to tell you guys, hey, don't do this stuff because you're going to get wrecked. And that's probably because most people are using it the wrong way. Right. And it's maybe not even most people.
Everyone in ERC, decentralized ERC20s gets wrecked the first time around too. It's like, but Richard mastered leverage trading. And I think that's the largest reason why he became wealthy rather quickly. And he kind of alludes to that his brain power. I'm not saying this is true or not. I don't really care, frankly. And I know the neuroticism that some men have can be beneficial, and some guys are not ready for that fight. It's not a pretty one.
Yeah, spot on.
What do you if somebody's wanted to go long or short something, what are the costs involved to do this, to hold a position, say over the course of several months or something like that?
So you have a funding rate that's based off of people that are borrowing and across the platform. So, you'll see down here the borrowing fee per hour. Down here, this will be dynamic based on the rate at which people are using up the liquidity. And then that is your funding position. Like, so on a BitMEX, that would happen like every 8 hours, right? A funding rate would drop, and then the shorts would pay the longs, or the longs would pay the shorts based on the market price. But yeah, here's the.
And this is coming out of whatever you contribute.
Yeah, this is this comes out of your current position, right? So your collateral for the particular position.
Right, and so you can keep this position open until your collateral is gone, effectively.
If you don't get if you don't get liquidated, it would just yes.
Well, it wouldn't get liquidated until it's just gone, right? Or am I missing something?
If the price moves against you, then obviously you would get liquidated. But as long as your position is open and it is in profit, yes, you'll be paying a funding rate by the hour.
And what about the in the opposite? Like, is there for the swaps and things like that? What are the fees for that?
I believe the swap for let's test it out, because I want to pay.
This is probably going to be a minor portion of what people do use this for, though.
There's your fee right there. So it depends on. So this is kind of like Curve in a way. You have multiple assets that you can trade in and out of. And it's based off of ratios on the actual protocol itself. So you'll see what we want things to be at. So for instance, Pulse, our target weight is basically a third of the platform. That's where we want Pulse to be, right? And then say something like, let's say Hex. See, there's a lot more Hex in the pool than we would like, right? So you might get a cheaper rate swapping between Hex, as you can see here, than you would for something like, Pulse Chain, because we want more Pulse and we want less Hex. So you probably get a better deal swapping between those two assets, right? So this is dynamic, the fee that you incur when you do the swaps. And this is all happening between the liquidity pools on Famous, right? It's taking the spot price off of PulseX and then giving you that price between these pools based on the price on PulseX. But, the fees between them, they're dynamic. So
effectively, say in this example, if this were on, say, Ethereum or something, and Ethereum, but back to the weighting you just had it at?
Say that again.
Can you go back to where you were at, Dylan?
Oh, yeah. Weighting? Yep.
So when you're back over here, effectively, so this is at 33%, and then the target is, or it's at 30%, but the target is 33%. Then the rate to swap is going to be lower for this, correct?
I believe so.
Yeah. And inversely, in the Hex example here, Hex is overweighted, so it's going to be more costly here. I
believe so. Yep.
Yeah, so that Sam is going to incentivize you basically to help us push it towards our target weights. Yep. That's the idea. So I'm glad you came to PHLP. PHLP is you asked about liquidity. PHLP is the liquidity portion of this protocol. And I quite like it because it's about a 60-40 split between stablecoin and crypto and stablecoin. So it's sort of like a balanced portfolio. Typically in a portfolio, you're going to have about a 60-40 equity fixed income split. So this to me seems like a pretty nice way to get exposure to a broad basket of Pulse Chain coins, but also still have some defensive elements to it with the stable coins as well. You earn an APY for providing liquidity that's paid to you in all of these currencies. And if you look at GMX, it's about a 10 to 20% APY on average. And you're also basically earning fees as the traders lose when you provide LP. You do have this impermanent loss risk where if the traders are all right all the time, you'll end up, with maybe one-sided, too much crypto or too much stablecoin. But that's more theoretical. In reality, the traders will lose, even in up markets only. They tend to lose. There's a great example of it. There was in the Monte Carlo casino about 100 years ago. The roulette table came up black about 32 times in a row. So if you do the math on that, it's like basically astronomical, improbably impossible, right? The history of the universe hasn't had enough days to explain an event with that much sigma, right? But it happened, and the house made a ton of money because everybody just started betting red because they're just like, it just can't keep happening. But it happened 32 times in a row, right? So anomalies happen. But yeah, the PHLP token is an elastic token, so this can get as big as you want or as small as you want. The difference between it and the Fame token, with the Fame token, you're being paid fees on the platform, basically like you own the platform. So it's like being CZ or like being
So
one of these guys.
getting 3 different fees, like short fees, long fees, as well as swap fees.
Yeah, everything. Yeah, I think there's actually 5 different types of fees, but these specifics, I'm not a detail-oriented person at all. So, but yeah, there's a lot of fees, and if you look at the numbers that I tend to care about, GMX has done about $120 million in fees over the past year that it's been alive. So it's been on our Arbitrum a little bit longer than a year, and AVAX a little bit less than a year. So it's done about 100 million in fees on Arbitrum and $20 million in fees on Arbitrum, which is really impressive. That's being paid out to the platform tokens, so their equivalents of the Fame and PHLP token. And that is something that's very unique. We talked earlier about fundamental value in crypto. Well, so these tokens actually have a fundamental value in the sense that if the market anticipates that there's going to be more demand for this platform and there's going to be more volume in the future, that means there's going to be more fees. So that starts to act like a discounted cash flow that the market needs to price in. So if you look at the GMX token, it's worth about $500 million, and it's actually up year to date. One of the few tokens that is, and that's because there's still lots of trading volume. These platforms are very profitable and they're growing. So that makes it in my opinion, a weird, almost defensive play, relative to meme coins and things like that. So
is the LP token, is that also going to be earning fees, all the fees, whether it's 6 or 2 as well?
It earns 60% of the fees. We have the ability to adjust this slightly as part of our governance, but it earns about 60% of the platform fees. Could be as high as 70, let's say. And the Fame token earns the rest of it. So, we have the ability to move that up and down in order to create the right balance of PHLP and Fame. But yeah, so the nice thing about the Fame token is it basically it's not elastic in its supply the way PHLP is. It has a finite amount. There's no inflation to it.
There's Buck using big words again that nobody in the audience understands when he's talking about elasticity.
That's all right. They can Google it. But yeah, basically just means that the more people that want to add PHLP, they can. So just like your Uniswap pools, they can get bigger or they can get smaller, right? And that means you're sharing those fees with the pool as it gets bigger or smaller. Whereas with the Fame token, you're basically getting the same proportion of those fees no matter how much volume there is. So in my opinion, the Fame token is sort of a bet on the future amount of fees that the platform is going to be doing, whereas PHLP is more a bet on these underlying tokens that you see in front of you. That's your basket. You're effectively long all of those, but also you're betting that the traders are going to get it wrong, and you're also making another bet on the fees of the platform as well. So
the biggest bet is the actual adoption, right? Like that's kind of assumed,
yes.
But like the biggest thing is going to be actual adoption of this. What I had a question I always forget I was going to ask about. What do you think about the adoption of this, right? Because the adoption is what allows us to sell our shit to some future buyer at a higher price. What do you think about that? Because that's going to be like the piece that underlies everything.
So I think there's actually one more piece, which is the success of Pulse Chain in general. Is probably the first thing you want to think about, right? If Pulse Chain is unsuccessful, this thing is less valuable, right? We do have a desire to be multi-chain. I'll say that without saying too much more. But I think with the user base that we know best, at the moment, we're I think pretty well situated in this community. So if Pulse does well, that's very good for things like Fiat. It's very good for things like Famous. It's good for liquid loans. It's good for everybody, right? The second thing is, so what is the adoption like? Well, there are not a lot of CeFi guys that are too into Richard, and Richard's not into those guys either, right? And that's where most of the competition is going to come from. I mean, they'll come, obviously, right? And then protocols like this are actually pretty hard to run and build, right? There's probably only a few people in the world that know how to put something like this together. And they already have fertile hunting grounds on other chains and brands and reputations that they need to protect, right? So the odds that they're going to come to Pulse Chain anytime soon seem pretty unlikely to me. And then the third thing is who are the users and the net and who's in the network. So I've been in this community since the very beginning. I know just about all the OGs, and just about all of them know who I am. So the biggest users of this are going to be the token holders as well. And that's one of the reasons why we're going to do a sacrifice, is because I'm bringing all of you into the tent now, right? Because I want you to own this. I want you to get to benefit from it. I don't want CZ or the Sam Bankman-Frieds of the world to benefit from something like this. Okay, I don't want some anonymous guy coming who doesn't give a damn about this community coming and keeping all of the fees for himself, right? So this is a better model, I think, than probably anything else that's going to come in this space. And believe me, they will come eventually, but it's going to be a lot more difficult for them if the top 1,000, top 5,000 users of Pulse Chain are going to be guys that own a portion of this. Where do you think the adoption is going to come? I mean, they may have a technical advantage, but there's nothing in DeFi as good as this at the moment, really. That's true DeFi. And then, obviously the CeFi guys will have a marketing and size advantage. But, obviously we're a community that is incentivized to use DeFi. I don't like using CEXs. I like my privacy, so I much prefer using this, even though it might be more costly than using a exchange, let's say. This is a better use case for me.
I had three more probably very quick questions. So for people who don't want to hedge, they don't understand what hedging is, how that all works, but they like earning yield. Can you do single-sided staking, or is it more because do you have to do 2 tokens to stake in this?
No, so with Fame, you literally buy the token, and you, or if you sacrifice for it, you'll have it, and you stake it, and you get all of the fees just paid out to you in a basket. With PHLP, you deposit any one of the tokens you want into the PHLP pool, and then effectively your exposure is no longer that token; it's now the pool, and you're earning fees across all of those tokens within the pool.
It works like Curve.
So when you go to redeem, though, so this is one of the things I was reading through and I wasn't sure on it. It sounded like when you go to redeem the PHLP token, that you could redeem as in the exact token you took, or you had the option to redeem anything you wanted.
Yes, that's correct. That's right. So while you're in the pool, you're accruing, your exposure is to all those underlying currencies, and you're accruing fees in all those currencies. But at the end, you just withdraw, just like you would from a fund, right? So if you invest in a fund, there's usually going to be hundreds of securities if it's a bond fund, or at least 30 if it's an equity fund, right? So that it works just like that. But then when you redeem, you say, I want cash, right? Or usually you don't have a choice. That's the only thing they'll give you. Right. But in the crypto world, we can literally don't just scroll down. Yeah, there you go. You can literally pick which one you want to take out. So, you can deposit your hex, and then you can decide, a year later, okay, I want to withdraw now. And I'll take Pulse instead this time. It's up to you.
Yep.
Don't you see an opportunity for manipulation there? Because like whether it's not just paying fees to swap, right? Like I'm like, okay, wait a second. If I go to Uniswap and I've got $1 million of this thing that I want to swap into something else, then I go in there and I could stake it, and then I could withdraw, and I could withdraw a different token, effectively eliminating my slippage.
Yeah, I mean, there's a lot of things you can do there. I mean, the one thing I'd say is this is a price taker, this protocol. So we take the price from Uniswap, right? So this is a player versus player type of instrument, right? But yeah, if you were a big whale, let's say, and you knew you wanted to buy Hex, right? It would make sense to me to come to a platform like this and put a Hex long on first before you do it, right? Because that would effectively mean that this part of the slippage that you're going to incur when you then go to buy spot on Uniswap is going to be reduced, right? And these sort of strategies are quite normal. This is why.
But what about instead of, okay, so let's take that example. You're like, okay, I like Hex. I like to increase exposure to Hex. So I don't actually want to do this through a long position in terms of like leverage. I would like this as in just buying spot. But if I buy spot on Uniswap, I have to pay leverage, or I have to pay a slippage, or I could set up a range order right on there and hopefully it gets fulfilled. Or
yes,
I can come to your protocol, I can deposit USDC, 6 minutes later, I can withdraw Hex and not have any slippage.
Yeah, you can't do that. First, because you have to hold it for a total of 15 minutes before you can withdraw, and
so 16 minutes.
You'll be paying double the fees to do that, anyways, without any slippage. If you
why is that? What are the fees to enter the pool and exit the pool? So there's a tax in and out, basically.
Yep. So let's see here. So your fee is 15% to purchase a PHLP if the size
0.15%.
Yeah. So as you're, let's say you want to do Hex here. Buy with Hex. So I'm going to do max. So see, for instance here, I'm going to be paying just to enter the position, with my Hex or, my stables or whatnot. But in this case, I'm doing my Hex to get into this position. I'm paying a 0.75% fee, which is way more than just an in and out in Uniswap off the bat, right?
But you can eliminate slippage potentially. So somebody would have to run the numbers to see if it would
So
make sense.
if I may,
you can do this.
If I may, if you think back to, so what I was trying to explain to you, so imagine you're Godwell and you want to go buy a 10 million spot exposure to Hex, which means you want to go on Uniswap and buy $10 million. You can go start buying it on Uniswap. The problem is the whole of the community is going to see you do it, right? So you have a couple choices. You can start buying slowly and then they're going to start front running you. You can buy all at once and put on and eat a lot of slippage, right? What I'm saying is if I were someone like Godwill and I wanted to, get a big exposure at the most efficient way, I would come here first and put a long on in a different wallet, right? And then when people start seeing me buying and they front run me, I'm basically winning on this side. So, and this is sort of analogous to what happens in the investment world anyway. We use Goldman Sachs and JP Morgan and all these other guys to help us put $100 million to work. Right. We don't just go and fat finger buy. Right. There's an art form to it. And, this is just one more tool that, guys like that can use. And it's important. Like you asked about how do you get big investors into these things? They need to have things like this. Right. And Fiat.io, which we're not really going to go into today so much, but we should at some point, is yet another tool that they can use in this regard as well. To sort of get that exposure. So if you want to reduce fees and you want to be really efficient, this can help you with that. And the smart guys are going to figure out how to do that stuff.
That was very nicely put there, Buck. Very nicely put. So to do the same exact thing, because that's probably helpful for people. You could hedge the slippage if you cared to by a small position. You know what I mean? By going long here, if you're going long. Now, can you do it? And then we'll wrap things up. Can you do this exact same example if somebody wants to sell? So currently you can go through and set up like a range order, or you could sell yourself short, right? So if somebody's like, damn, I've got this $6 million position of Hex that I would like to dump and get rid of over some period of time, how is somebody going to hedge that position using this protocol, right? Because we're going to have people that will probably watch, who probably have some amount of money that they want to sell things and they don't want to move the price against themselves.
Yeah. Okay. So like, there's a guy right now that everybody calls DO1, for example, and he's got hundreds of millions of hacks, and he's been selling it and terrorizing the community to an extent. So if you're a guy like that, instead of selling piecemeal 20 grand at a time, freaking everybody out, you can start to put a short on, right? And you can start to move that money. As price goes down, because everybody's freaking out because you're selling, you're not losing quite as much, right? That guy started selling hacks at probably 42 cents, and he's still selling at 2.6 cents a year later, right? So if you're that kind of guy, then a protocol like this is very useful to you. Also, Fiat.io, also very useful to you. So you can basically do things much more efficiently and move these things around. And if you are one of those guys, like, please consider looking at this product and think about sacrificing for it, because you have too much. As I said earlier, you might think you have too much exposure to Hex still, and you want to diversify. This is a pretty nice way to diversify across all of Pulse Chain. And obviously, I said we have interest in being multi-chain as well. Please keep that in mind as well. So if you whales out there, you are the guys that I really want to talk to about these things. The kind of average person, I think things like FAME and PHLP are very interesting plays for you guys to just earn yield. But yeah, you guys that have massive positions and do move the markets, that's who I'm building these tools for.
Thank you, Buck. This has been a very interesting conversation.
Real quick before we go, I'm trying to lead the surge on people understanding admin keys and the limited access admin keys that go along with some projects that still do make them DeFi relevant, but there's some nuance there. Can you touch on that when it comes to this product?
Yeah, so both of our products, Fiat and Famous, both have what we call governance keys. And we do not have what you guys tend to think of as admin keys. Admin keys is when we literally have the ability to come in and steal your money, and we say that we need to have this ability in case somebody fucks up or something goes wrong or things like that. We do not have that ability, right? That's what they mean by admin keys. And that we would say if you had that would pose a risk. It's not necessarily a risk that is not worth taking. Sometimes it depends on what you want, right? But for us, we do not have that ability. But what we do have the ability to do is to change things around, such as what tokens can be added and removed, what weights they should be, what leverage you're allowed to use. So like, we probably won't have 50x leverage on day one. We'll probably start conservatively because we think Pulse Chain will be very volatile. I think Sam mentioned that in the beginning about crypto being volatile. It is. We'll probably limit the amount of leverage we'll allow people to have early on. So we have the ability to sort of influence things like that, and we think we're the best placed people in the community to really think about that. We understand risk quite well. We've done this for 2 decades ourselves. We've been working together forever. We've known each other for the better part of a decade, and we have pretty strong backgrounds in financial analysis, investment risk, and computer science. So I don't think there's anybody else as well placed in the community as my team to bring you guys these tools. If there were, then I would encourage them to go do these things. But I think in my opinion, we're hopefully the best that you can have. So yeah, the admin key thing is a bit what Richard says. It's a bit like trading is bad. He says admin keys are bad, but it's a little bit more nuanced than that. But on average, it's good advice. Drinking's bad.
Well,
right?
In the future, all these things are going to have admin keys that have product market fit. His product just doesn't happen to need anything other than staking. But so it kind of changes the dynamic.
Yeah, but he'll have admin keys for PulseX and his bridges and things like that, right?
Dylan or Buck, do you guys want to tell people who are interested in learning more about this where they can go to find more information? Both a Telegram or website or other socials that you want them to check out if they're interested in looking into more of this?
Sure, yeah. Follow us on Twitter. I will send the link right now. Join the Telegram. That's in my name. As you can see, t.me/famousx with a PH, right? And then go mess around on testnet, guys. I'll post a link. It's relatively easy. testnet.famous.io.
And for anybody who is not sure where to find those, you can check the links in the description of the video. They'll all be down there. The Telegram, the Twitter, the testnet, so you can go play around with that stuff down there. Any last thoughts here, Dylan? And then we'll move to Buck. Any last thoughts here before we wrap up?
I think you good? You want to talk?
I'm saying, yeah. Listen, guys, if you don't have any money on testnet, send me a DM and I'll hook you up. Don't worry, I got plenty to go around. So
we know all about those hexagons and donations. You know I had to slip it in, guys. Let's get out of here. Crypto in the morning, every single day at 11 a.m. Eastern. Hey, guys, I really appreciate your work and your level-headed, non-biased views on stuff. It's not always easy to be that way in the space that we are in. Thanks, guys, and we'll talk soon. And hey,
thanks for coming on, guys. I appreciate it.
Live streams and blowing people's brains up. Let's get it, guys. Crypto in the morning every single day, 11 a.m. Eastern. Make sure you smash all the links and hit all the buttons. Have a great day.
You already know what time it is. Crypto in the morning. Crypto in the morning. Crypto in the morning. Waiting on phone. Crypto in the morning. 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 Waiting on phone. Crypto in the morning. Crypto in the morning. Smoking a blunt on my way to the gym. 11 a.m. and I'm already tuned in. Got me some hex and I'm making a state. Got me some hedge and I'm making it rain. Pay me some maxi and that's just in case. Gym ready to set me to show you the way.